Thanks everyone. Thanks everyone for joining. Hopefully you've either got, if you've got this message through the subscribers email from the Cost of Care website, or through Care England, or your other routes from local authorities. We really appreciate everyone that's arrived today. We will be making a recording of the session. So if you've got colleagues, or if anyone does miss it or has to dip out kind of halfway through, not to worry. We'll pop it on our YouTube channel with the other videos. I'll timestamp various points as well, so that it's easy to navigate if there's particular things that people want to go back to as well. We've got an hour this afternoon, just up till 1 o'clock. So I've obviously, as you may have seen in the email, in the distribution comms, there's a few areas that thought it was relevant just from the kind of trends and themes that we've seen come back. Queries from providers, queries from local authorities as well, in terms of some kind of common areas where people just want a little bit more clarity, and walk through how various aspects of the model works. So I'll focus on those for probably the first half an hour of the session. And then the second half an hour of the session is free Q&A. So I know that obviously as everyone's joined, they'll probably be muted and video off for the session, just for the benefit of as I talk through. But the chat's available, so if you use the chat function at any point during the kind of first half hour or in the hour, just to ask any questions that you might want to ask, and then we will cover those in the second half an hour. I've got colleague Dan Mould here from the LGA who's going to be monitoring the chat, and my colleague John as well will be coming on in a minute or so. So we can field questions at the end. If there's something that probably wants a little bit more clarity, we can. I'm sure Dan can unmute people just to if we just need a little bit more of an explanation. Hopefully everyone can see the slides. I am going to share the toolkit in a second as well, just as we go into some of the detail. So today's session, we are going to be looking at 4 things in the main. The first one was accounting for agency pay and other types of enhancements. This is just something that a couple of people have asked for a little bit more detail on, so we can go through that. Adapting the model for different service types. So I'm very conscious, particularly when it comes to home care, and this is probably less relevant for care homes, although I appreciate that the toolkit here is predominantly for home care anyway. But one of the big challenges in terms of putting together a return when you're looking at business costs as a whole, particularly if it's a community care focused business, is there's probably predominantly a mixed service model. So you might do some supported living, you might do some live-in, sleep-ins, that kind of thing. So I'm going to go through a couple of examples of how you might want to adapt your use of the model for different service types. And then there's a couple of things that I thought it was really helpful to go through once you've obviously completed the toolkit, because these are really kind of variations or scenario planning or sensitivity analysis, if you will, in terms of understanding the impact on a unit cost for different things. So the first one was rurality and geography, and then the second one was looking at varying visit times on average. Okay, so without further ado, I will share my screen. The first one was around agency. So particularly with regards to agency pay, obviously, if you are a business that has some element of agency costs for your direct care staff, then that's going to attract a different pay rate, and obviously you need to be able to account for the different pay rate for various types of hours that have been produced. And as always, I put some example figures in here to obviously show and account for that. But I'm just going to go through a couple of examples and a couple of things that you might want to consider with regards to kind of uplifting costs for the purposes of agency. So the model at the minute, this toolkit that's been developed, we've got contact hours per week of 775 hours. Now, the model assumes that those 775 hours are being delivered at these different rates. So 80, and obviously if you look at the call allocation, the percentage of all of those hours is split up. So 87% of the hours are delivered at a carer's rate, depending on whether it's weekday, weekend or a bank holiday. 8% of the hours are delivered at a senior carer's rate, and then there's 5% of the hours are delivered at a other enhanced rate. So this example here, there's a determination that there's just another kind of short notice type rate that's that covers a different type of staff here as well in the short notice unchargeable. So as it stands, all of that is absolutely fine. But actually, what we also want to say is, well, some of this cost was also covered by agency. So there's a couple of different ways that I can do this. So let's say that actually there were 5% of the hours were covered by agency at a different rate. One method I could use is I can just change one of the green lines, if I've got a spare one, to agency and say, let's say that I had to pay agency £12.50 an hour for 5% of all of my hours. Okay, so we've got another cost line there with our agency. Obviously, if you have if the agency rate varied across all of the hours, then if you know how many hours you had on shift for agency and you know the total cost of that, you can divide those two things. So I don't know what the cost of those are. I'm just gonna calculate it quickly. So I need to just open up another spreadsheet to be able to do that. So okay, so yeah, let's say that you had I don't know, 25,000 hours, or what's that on a weekly basis? Probably about 1,000 hours a week, or less than that. Sorry, 500 hours a week that you had to pay for agency, and your total bill was you know, in fact, if I do it on here, I do let's say £30,000 divided by 1,000 hours. What does that give me? Yeah, let's say I had 2,000 hours that I bought an agency, and it cost me £30,000 in a year. So obviously all I've done here is I've just divided the 30,000 by 2,000 hours, and then that's given me a rate of £15 an hour. So a little bit off from my guess previously, but that's obviously appropriate. Then obviously all I need to do is make sure that my 2,240 here matches. So I'm going to say that's going to be something like 4.9%. Yeah, good enough, 2016 hours. So yeah, so obviously I'm just matching these figures to basically ensure that the model accounts for my agency pay bill at the end of the financial year that I'm reporting for. So that's an example of how to include agency. The one caveat with approaching agency in this way is when it comes down to accounting for non-related pay costs. So we've got holiday, sick pay, maternity, paternity, it's highly unlikely that you will pay for these additional costs when it comes to agency. So agency is just concerned with the contact time. You know, you hire them for an hour's call, or you might hire for a block of 8 hours as a shift, for instance, and you just pay for that time. The purpose of obviously having agency is that other things are included within that cost already. So what that might mean is, instead of having, you know, 12.07% as a cost on top of all of these hours, there's a proportion of those hours that you wouldn't have that cost for. And obviously, if you know that if this holiday pay is a known figure there, then it's probably relevant that you might just have to reduce the percentage here slightly to account for the fact that some of that cost is already covered in your agency rate. So if I just pop that down, I've obviously taken a few £1,000s off the outturn bill for holiday, just so that all of these figures match up. And So that's one method of accounting for agency costs. I'll just delete the rows there so that we get back to what we previously had. The other way of accounting for agency cost is just looking at your overall pay bill for agency, but in particular just looking at the difference between what you would normally pay on your standard hourly rate and then the variance between that and an agency rate. So for instance, if you pay £15 an hour and you would normally have paid £9.80 an hour for your carer, and you know that 2,000 of those hours there were actually at an agency rate of £15, then the other method that you can employ here is if I just I'm going to do it in this column here because this is just the unit. The format is a pounds and pence, which will be easier. But let's say that we have £15 minus £9.80. So I'm basically paying a premium of £5.20 for every care hour that's done by an agency staff compared to my basic carer. So I know, because I now know the variance, I basically want to multiply that £5.20 an hour by 2,000 hours. And basically the total cost on top of what it would normally have cost me is £10,400. So because that's £10,400, what I can then do is I can use that figure and I can apply that in an overhead. So instead of I'll use one of the spare overhead lines, and I can just put agency premium here, and basically I can put the total. Oops, not that much. £10,400. So basically that was the difference, because I've already accounted for the volume of hours at what I would say is the standard pay rate. And because I've already accounted for some of those up here, I don't actually need to account for the full agency pay cost because it's already been taken into account. Whereas what I do want to account for, obviously, in here is the additional cost incurred because I had to use agency for a portion of those. So there's £10,400 extra there, and obviously you can use this to put an explanatory note there to say 2,000 hours. And obviously that was the difference, and obviously the calculation I did just from an Excel perspective was £5.20 multiplied by 2,000 hours. So if I do that in Excel, then obviously it'll just do it for me. So that's a couple of different ways of accounting for agency costs. I'll leave that in there. Excuse me. Second time, here we go. I'm just gonna resize the window as well a little bit so that we can so that the figures are all clear. If yeah, I'll just zoom in a bit. If anything's not clear, hopefully that'll be clear enough on the screen. But if anything's not, just pop a message in the chat and we'll I'll zoom in. Hopefully colleagues on the call are fairly familiar with the spreadsheet by now, but probably if you are struggling with obviously the areas, then I can go through a couple of different ways, particularly for how to kind of cover things, cover nuances of a business when it comes to the actual year for whatever you're reporting, that are not straightforward. It's not straightforward how to kind of cover them in the model. One thing I would say just up front is obviously for those providers who are replicating actuals from a previous year, obviously what you will have is a set of costs. So you'll have a set of costs from the last 12 months or the 12 months of the financial year that you finished, and obviously it will be pounds and pence figures, and it's less concerned with how many hours went into generating that pounds and pence figure, or how many registered managers or how many sets of resources went into generating that pounds and pence figure. It's predominantly concerned with what the outturn cost was. Obviously, you'll note in the model that it asks for inputs in a lot of areas that aren't necessarily directly related to those costs. And if you're reporting actual costs, whilst it's obviously more straightforward to just put in the cost if it's a known cost, it derives certain things. So obviously from a forecasting perspective, if you want to project forward in terms of what will I do as a business in the next 12 months or next 2-3 years, this is a really relevant way. But if you reproducing or replicating previous costs, there is some element of manipulation here that obviously will be required. So I'll just go through some of those examples now. What I would stress, and I would say this with everything in the model, if you know some of these figures, and particularly if this is being reported as actuals for a financial year, you already know. If you know some of these figures, such as what your total pay bill there was for contact time, which is contact time, travel time, which is this cell here, so G89, and you know the actual bill for some of these, in reality, it's just about ensuring that you can match up these figures here to what the cost was, so that you're obviously, when you submit your return to the local authority, you can be sure that that's obviously accurate. If you're projecting forward, obviously if you're using this as a projection model, it's we're less concerned with producing an accurate figure, because the point about a projection, a forecast, is obviously that we don't actually know what that pounds and pence is going to be. What we do know is obviously the input excuse me, we do know the inputs that we're going to have to put in potentially, which creates our budget. And obviously this is the difference between whether you're forward looking, whether you're producing a forecast, or whether you're trying to replicate previous actions. The next query that I just wanted to cover was adapting the model for different service types. So I'm conscious that there are probably a few different service types, and I know in the, if I just scroll back up to the volume, we've had a few queries relating to obviously the size of this box. The size of this box. So I know there's obviously some manipulation of accounting for different service types here as well. There is an FAQ on the website, and I've responded to a couple of people on email for that. So if you're struggling with how to reduce those, I can send the timestamped video from last time, which is on YouTube, out to show how to do that, or I can send that email out as well. But if we're kind of particularly accounting for different types of services, and this relates to whether you want to include it or not, just a note on the DHSC Fair Cost of Care, the spec in terms of the scope of the exercise, they're predominantly looking at traditional domiciliary care visits. So these kinds of visits where it's commuting in for a 30, 45 minute, 15 minute, 60-minute call. And they're not looking at things such as live-in care, sleep-ins, waking nights, supported living type models where you're typically going to have one-to-one 24/7 support. However, it might be relevant when you're producing a total unit cost across the organisation and you're looking at a whole branch, which we always think is a valuable exercise to do. You want to include those other service types as well. So for instance, in here, let's assume that the top 3 are our standard traditional dom care, but then let's assume that we have a live-in type arrangement here. Now, the living arrangement has to obviously be related to how you pay for your staff for that living, rather than what the how you get paid for that, from a commissioner or from a service user. And typically with living, there are probably going to be a couple of different models. One might be some type of what you would call a daily average agreement with your staff, where you say the living is 40 hours a week. We expect there's going to be 40 hours a week worth of activity. However, as part of the contract, you're obviously going to live with a person. You will, practically speaking, be on call for some portion of time. So you want to obviously produce a cost for that staff member based on whatever that daily average agreement is. So let's say that you've got someone on 40 hours a week, for instance, as a living person. So 40 hours a week is what they get paid, and let me just have a look. Yeah, I'm just going to multiply that by 60 because the column asks me for it in minutes rather than hours. Yeah, so the living package itself is 2,400 minutes. Now, number of visits per week. because I've got a single living package here at 2,400 minutes, I might just say, well, this visits per week actually just relates to the number of customers, because I'm only going to have one person as a living carer with one customer at a time. So if I have 4 living clients, for instance, then what that actually tells me is what I'm paying for as an organisation is 160 hours of living staff time per week. Now, I appreciate that that might be 24/7 cover, and if you're paying for 24/7 cover, you obviously have 3 different people on 8-hour shifts throughout the day and all of that stuff. That calculation there will be materially different, but I'm covering a unique perspective here just because it was probably more helpful to do the nuanced example here as well, just so that you see the difference. But 160 hours a week for and 4 visits a week. Now, from a costing perspective, I now need to account for those hours in my basic rate. So what I'm going to say here is, let's say that this is my living, and we've got, let's say that we pay our living at the same rate as a carer, for instance. Oh no, we're going to do it as a different rate, because obviously if we did it at the same rate as a carer, it wouldn't make a difference too much. But let's say it's £10 an hour. And then what I now need to figure out is, well, what are the actual hours that go into that living package, which I know is 160 hours a week, because obviously I've got it up here. Contact hours per week is 160. Now, as a proportion of the 935 hours that I've got as a business, obviously I just need to find out what the percentage is, which I'll just turn that into a percentage. So basically what I'm saying is 17% of the cost of my business as part of the staffing goes, then 17.1% of staff hours, practically speaking, go into that servicing those living packages. So I'm just going to do that here into 1%. So actually what I'm saying is I'm giving 9,000 hours at £10 an hour, which covers my living packages. So that's how I marry those two up. You could do the calculation directly in this box as well. So if you know it's 160 divided by 935, then it's 17.1%. So you can do the calculation directly in the box. It doesn't matter from a modelling perspective whether that's presented as a contact hours per week, and then the proportion here, it asks you it in hours per annum, because everything gets multiplied by the same volume of hours. So when you're trying to track it back to a unit cost, everything then gets divided by that same measure. So if it's multiplied by 52 weeks, and then you get the total cost for 52 weeks or a full year, then you divide both sides of the equation by the exact same number. So it doesn't actually matter, even though I've done the calculation as weekly rather than the annual cost here. It's the same proportion. So that covers a different service type there, which may be helpful. Same goes for things like sleep-ins. Obviously, sleep-in, it might not be 2,400 minutes. It's probably going to be something like a 9-hour. 9 hours, so 540 minutes. You might do 20 sleep-ins a week, for instance, and your sleep-in rate, obviously this might not be necessarily paid at national living wage, because it's just available for work unless someone obviously gets woken up, and then obviously you've got to pay the individual hours at national living wage. But let's say that this gets paid at £8, so that's your sleep-in rate there. And so I'm doing 8 times 9 hours is what's that? Is that 56? Isn't it 8 times 9? 72. So let's say I pay £72 a night to my carer for a sleep-in of 9 hours, but I've got 8, so that's how I just work that out. So practically speaking, £72 divided by 9 hours gives us £8 an hour. So then I just need to work out the proportion of the business, and again we've got the contact hours. So in this case it was 180 hours. There's 955 hours in total per week, so I'm just going to amend this equation. So I'll do 180 divided by 955, and again that gives me a slightly larger proportion of the business. 19% of the business is costed at that sleep-in rate, and therefore 19% of the hours are delivered at that sleep-in rate. So that's how we might account for different business models within the spreadsheet. You could also, a third option, if there are multiple business models, Well, I guess the third option is in two parts. Part 3A would be just to ignore anything that's non-standard. So if you are, practically speaking, in a business which has got far more than 8 visit types, and there's all sorts of different types of business model that that you can't even fit a single rate against, then you could just focus on the dom care aspect of the business, or the home care aspect. So I'm not a massive fan of domiciliary care as a term. I prefer home care. But yeah, you could focus on the home care aspect of the business, and then as long as you know what proportion of your business, either in income terms or in hours terms, then if you know that makes up 30% of your business or 40% of your business, practically speaking, you don't need to include other service types as long as the local authority hasn't asked you to, because the DHSC Fair Cost of Care certainly doesn't ask you to. So there's no necessary requirement for you to try and figure that out if you're not particularly interested. The only caveat with that one is if you choose to exclude it, then make sure that you exclude the overhead costs that would also be apportioned to that part of the business. So for instance, if you've got back office costs here and you know that domiciliary care is 30% of the business, but you've got one registered manager that looks after all of the services, then you know that as a full-time equivalent resource, then the registered manager would be 30% of their time. Just if we're just going to do it as a flat line, 30% of their time might be attributable to home care, 70% of the time might be attributable to the rest of the business. So what I would do in that case is obviously say, I've got one full-time equivalent in my branch, but I'm going to apportion that cost for the home care aspect of this branch, and therefore I need to account for 30% of that full-time equivalent's time, i.e. 0.3 FTE, will be applied to that portion of the business that I'm modelling for. So this obviously then changes the net full-time equivalent cost, changes the pension contribution, it portions everything equally. Okay, same with overheads. Overheads here, obviously, if it's 30% of the business, if it's 70% of the business, if you've got the total cost across the branch, you want to basically apportion that equally as well. The third question or query that I wanted to resolve was understanding the impact of rurality and geography on cost. And also understanding and then the fourth one was understanding the impact of varying visit lengths. I'm going to tackle these in the first instance in the same way, because I wanted to just share a slide in terms of how an approach as to how you might consider, well, if I have different visit types and different costs in different areas, whether it's rurality or whether it's visit time, there's a particular way that we might want to consider this. So if I just share this screen, I will I'll obviously able to describe this in a little bit of a better way. So I've titled this slide "How the Number of Visits Affect Unit Costs." I'll talk through I'll talk through this, so hopefully it'll make sense, but then I'll practically go through the model to say how do you implement this as part of the model. So let's say that we've got a business that delivers 10,000 hours, 10,000 care hours. So 10,000 care hours obviously gives a level of income. Let's say that it's paid per hour, so we give a level of income, or we incur a level of cost. Let's say in this instance, it doesn't necessarily matter whether it's income or cost; they should be the same. They should come to the same. In scenario one, each hour is so a single visit is 60 minutes. So it's 60 minutes on average. So an hour equals one visit. Therefore, 10,000 hours equals 10,000 visits. 10,000 hours at 10,000 visits. Is in this model, let's say this is £1 million of either income or the cost to deliver all 10,000 hours is £1 million. So you can see this is obviously highly fictitious because we've got £100 an hour per visit here, which is obviously quite extreme compared to you know what standard kind of service costs are, but I'm just obviously using this as an example. So let's say that the cost of 10,000 hours equals £1 million. We can split up that cost between the direct care cost and then the travel cost. as a proportion. So the direct care cost, let's say that the direct care cost is £50 per hour. So therefore, we pay for contact time at £50 per hour. And therefore, because an hour is a visit, an hour and a visit are the same thing, we actually have to pay for £50 per visit. We also incur £10 of travel and indirect care costs. So this could be mileage expenses and such like that are indirectly related to the visit, but still variable based on the number of visits. So it's £10 travel and indirect care costs per visit. As an organisation, when it comes to looking at the indirect costs, when it comes to overheads, so your back office, your rent rates, utilities, things like that. Let's assume that per visit, part of that £1 million, there's £40 per visit of indirect costs. So the makeup of that is £50 for direct, £10 for travel, £40 for indirect. So we equal £100 per hour per visit. Excuse me. In scenario 2, I'm going to assume that the visit time has changed here. So the visit time is shorter than in scenario 1. So in scenario 1, the visit time was 60 minutes on average. In scenario 2, I'm going to assume that the visit time is 30 minutes. So it's half the amount of time. Now, this materially changes the unit cost, as you can see below. And the difference here is we're still delivering the same amount of hours. So elements of this cost base are still the same. However, some elements of this cost base are materially different, but we're delivering those 10,000 hours in 20,000 visits. So there's double the amount of visits in this scenario. The outturn cost of those is now £1.1 million rather than £1 million in scenario 1. So it's cost us 10% more to do all of those visits in half an hour stints. And the reason for that is the direct care cost is the same because we're still paying an hourly rate for direct care. The indirect costs may still be the same because we're dividing the same level of fixed costs in our back office against the same number of hours. However, the travel time here has changed, so we still have £10 of travel and indirect car cost per visit, but because the number of visits has doubled, this element of the model has also doubled. And it's obviously doubled by virtue of the fact that we've got £100,000 extra here. So when we divide that 1.1 million by the 20,000 visits, we actually get £55 per visit, or if we divide 1.1 by 10,000 hours, if we look at it a bit more straightforward, it's £110 per hour. So this is obviously why it's not always straightforward to say an hour's visit is the same unit cost as a half an hour visit. The reason obviously I'm showing you that, I'm sure all of you are already aware of that as a concept, and I appreciate there'll be local authorities that are less aware of that as a concept. We do go through that with local authorities as well, but I wanted to show how you might model that differently in the toolkit. And the way that you can model that in the toolkit is just by amending this volume here. So based on the volume here, we've got a mixed economy of various different visit lengths, 38.4 minutes, 775 contact hours per week. Now, in this model, just scroll all the way down to the bottom. So the total effective unit cost per care hour, so this is a blended unit cost for all of those different types of visits, is £22.75. So £22.75, it doesn't matter whether it's a 60-minute visit, whether it's a 30-minute visit, the blended average across the entire mix is £22.75. If I wanted to model that for, imagine that my average visit length down here was not 38.4 minutes, but it was actually 30 minutes. So assuming that the volume of hours remains the same, but the visit length's reduced, I obviously have to account for the impact of this travel element here differently. And this is obviously going to show the impact of that here now. So the way that I'm going to do this is I'm going to remember that I've got 775 hours a week here. And I'm going to change the visits per week to make sure that all 775 hours go against 30 minutes worth of visits. So if I just get rid of the visits here so that I can zero out, don't need to remove the visit length per se. I just need to remove the visits so it doesn't account for that cost. So I've got 775. 775. So what I want to do is I want to do 775 multiplied by 2 because I'm doing double the amount of visits. At 775. So in order to get to 775 contact hours, I actually, at half an hour visits, I actually have to do 1,550 visits. And if I just go back, I'm doing in my original model, I was doing 1,210 visits to get to the same amount of contact hours. So now I'm doing 1,550 visits. So I'm having to do more visits to get the same amount of hours, which is my revenue generating portion of my business. So the impact of that, if we remember that the original unit cost was £22.75, the actual impact of that is the unit cost has gone up to £23.53. Now, obviously, this is a unit cost per care hour, but the unit cost per visit is obviously a proportion of that. So if I divide that by 2, assuming that this is 60 minutes, because an hour is 60 minutes, if I divide that by 2, the actual cost of a visit is £11.76 for a half an hour visit. But obviously, it materially changes this unit cost, and it obviously pushes the unit cost up. I'll just do it the opposite way as well to show the impact. So again, 775 contact hours. Imagine I'm doing it as a 60-minute visit instead of a 30-minute visit. 775. So obviously I don't need to do any necessary calculations because an hour is the same as a visit in this instance. The unit cost will go down. So it's not £22.75, it's now £21.75. Okay. And then I'll just go back to see what the actual average was. Yeah, 22.75. So so that's how you can manipulate the model to say, well, if I wanted a price point or a unit cost at different visit lengths, that's how I can do it. And I'm just going to go back onto my slide here because what I wanted to do was show this graph, and this kind of explains that not necessarily a phenomenon. It's just maths. It's just statistics. But practically speaking, if we have units of care time delivered, so this is obviously another example where I looked at a particular business model and said, what happens if we change 2 different elements? One was rurality, one was visit time. So the 4 different lines that you can see on here are different elements of travel time applied to different geographies. But what I'm interested in is if you look at one line here, basically this tells you the difference at different visit lengths. So the unit cost for an organisation delivering everything at an hour, you know, just looking at the bottom, might be £19.75. But if they delivered all of that same activity in 15-minute visits, assuming that they were also paying for travel at a fixed cost per visit, then the unit cost goes from £90.75 to £26.90. So obviously there's a material difference between one end of the scale compared to another. And I'm just going to just get my shapes on here. So obviously the average, I'm just going to do that. And let me just make it a little bit thicker so you can see it on the screen. Obviously, if I'm doing, well, what's the average across those, assuming that we've delivered a blend of all of these? The average is just going to be a straight line across the year, isn't it? So it's going to be a straight line that's somewhere in between that blue line there. So it's going to be somewhere in between that, depending on if you do more hourly visits, it's going to be down here. If you do less hourly visits, you do much more 15-minute visits or much more 30-minute visits, the average is going to be somewhere up here. But it's important to recognise that difference as well. We felt, and hence that's why we kind of created the model in the way that we did, so that you could account for that. The last thing I'm going to go through here is rurality, and I'm conscious that we've got 20 minutes for questions, but I'm going to treat rurality in the same way that I've just treated. Apologies, no, terrible language, terrible use of grammar, wasn't it? Terrible language. But if I treat delivering in different geographies and ruralities the same as I just treated visit length, then I can get the same output. So in this instance, I don't need to do anything with my volume. I'm just concentrating on my travel time. So let's say that what you've produced here, and obviously I can see in this example, these look like very specific averages that have been calculated here to get to a cost. So let's say that what you wanted to do was say, well, let's look at the impact of my most extreme rural area, and what would the unit cost of that one be compared to the unit cost of my least extreme area, which might be urban, or it might even be, you know, you are literally have staff working from street to street, so it's it's almost like going from door to door, and there's obviously very little travel time involved on average in that. But let's do the two examples in turn. So let's say I've got an extremely rural area, and yeah, 4 miles per visit. So I'm clearly going to have to do 4 miles. I'm literally going from one town to another, practically speaking. So I'm probably going to go on some kind of either dual carriageway or A road, something like that. Travel time per visit might be more like 15-20 minutes. I'll put 17 and a half as an average. 17 and a half, let's do 14 and a half miles. Yeah, so 4.5 miles, 17 and a half minutes per visit doesn't make a difference. Mileage is going to be mileage, so it's I'm assuming that I'm still paying the same expenses per mile, but obviously per visit that's going to be a lot bigger because I now have to pay 4.5 miles. So for this visit, for this kind of extreme rural area, my unit cost is £29.48. So my unit cost is a lot higher. If I'm looking at it from a urban area, and then let's say that it can't be quite street to street if I'm doing even if I'm doing portions of a mile, but let's say it's a quarter of a mile between visits. So it's a quarter of a mile between visits, and it takes me 4 minutes. Let's say, yeah, it takes me 4 minutes. So so obviously this is a very rural area. I'm literally just doing a residential, runs in a residential area. So I'm planning and scheduling my activity in a very rural urban area. For that, the unit cost will be £21.98. So obviously it's a lot different. So we almost had £30 an hour in one instance, but we had £22 an hour in another instance. And that shows you the varying unit cost versus travel. So I'll just if I just remove these and go back to the averages, yeah, that I had, yeah, perfect. So that's what I wanted to show in terms of how you can use this model. And this doesn't necessarily need to be for the fair cost of care exercise, because the fair cost of care exercise, most councils, most local authorities are just asking for averages. So obviously they're only ever going to produce a blended rate or a median for every cost line when obviously things get aggregated. But a useful way of using the model for you and to understand how the model will take account of different unit costs is obviously in there.
What is different between contact hours and visit hours? So would they be the same?
Yes, I'm not quite sure of the I might have misread the question. Contact hours and visit hours should be the same. So I'm assuming that by contact hours, it's the time that's spent in a visit. So the practical application of supporting someone is a contact hour. Visit hours, I'm not quite sure. There may be a Ade maybe have a concept of visit hours which includes visit contact plus travel, which that I've not heard. I don't use the colloquialism of visit hours per se, but practically speaking, it's unit cost per care hour is obviously how the model produces it. But what I would say with that is all hours are included in that. So if someone has to travel to get to an hour and they have to be paid to get to a contact, the care hour, the unit cost within that care hour has to include the cost of getting to that visit as well.
About where you might how you might handle multiple branches, but where those separate branches do have different cost bases in terms of their their overhead costs or their building costs for those different branches, and how you approach that, because of the way the model's set up, it sort of splits. You can input multiple branches, and Hazel's also are similarly talking about a walkthrough where more than one branch is introduced and how that impacts on costings. So
I guess I don't need to necessarily share the model to answer those in too much detail, but we spoke about this on the session yesterday as well, didn't we? I guess there's two things with regards to multiple branches, and I can go through both, but the question to ask yourself is, do you want individual costs for 2 branches, or do you just want everything lumped in? If you want individual costs for 2 branches, then treat treat a model as one branch and apply all of your costs, all of the volume to that one branch, and that will obviously be specific costs to that branch. When it comes to modeling branch 2, you'll need to then produce another model. So what you'll get is 2 spreadsheets which will have the unit cost for both of those branches. That's the most effective way if the question is, I'm trying to put all branches into one thing and I can't see the difference between one branch and another. And I guess the straightforward answer is, well, you won't do if you're lumping all costs into one thing. It's obviously only going to divide everything by an average. So the best way to know what the cost difference is between one branch and another is obviously produce 2 different models. Now, there are obviously nuances to that, which is some areas of cost will be different, some areas of cost will be the same. So for instance, if you've got 20,000 hours in one branch and 25,000 hours in another branch, for instance, the volumes will be different, but what might be the same is the pay for the carer, because obviously it's the same company. If you're working for the company, regardless of which branch you're working for, you might have the same hourly rate. So you'll be producing 2 models with different volumes, but obviously your staff pay would be the same. You may also have one registered manager, because registered managers can work across different branches, and therefore you might say, well, instead of having a portion of registered manager's time for one branch related to the volume and a portion related to another branch, it depends on how the provider chooses to allocate their costs, but you might just say, I'm going to split that down the middle and say a registered manager is half for one branch, half for another, regardless of volume. You might want to do it more specific related to the volume. You might have different levels of rent for one branch to another. So if you've got offices on a high street in the middle of a town, it's going to cost you more than if your second branch is in an industrial estate, which is a bit further outside of town, for instance. You might have cheaper rent there. So you're obviously going to produce 2 different models with 2 different sets of rents. If the question is how do you differentiate, how do you use one model and then differentiate the unit cost per branch, practically speaking, you'll struggle with that, because obviously by definition, if you're lumping everything together. I hope that was helpful.
And could you just quickly talk us through just people on the call, make sure everyone's aware, what the kind of offer of support is around the help desk and the various things that are available, and obviously we'll share the link to the website that they're all on, but just go through that quickly.
Of course, hopefully everyone here is subscribed to the mailbox, to the website. If you're not, if you got the comms via another outlet, Care England, CPA, that's absolutely fine. But if you want to get something, updates and things directly from the website, then we do send out those. So you can go on. I'll put the thing in the chat. Oh, thank you. Thanks, Dan. That's perfect. Yeah, if you go on the website there, the subscribe bit is only asked for an email address, doesn't ask for your name, doesn't ask for anything else. So you can just put the generic branch email if you want. But we'll give stuff out for that. Regards with the support mailbox, if you wouldn't mind putting the email address in, Dan, as well. Email us about any technical queries. So the types of things that I've spoken about, we can obviously address in the mailbox. It is a kind of text-only service. So obviously I've got colleagues that will respond to queries. We can't necessarily pick up phone calls with people or go on individual Teams calls or remote calls or anything, because obviously we just don't have the resource to be able to do that. We've not got it's not a full-time mailbox. It's typically manned start and the end of the day and then out of hours as well. So if people can describe the issues or challenges or the nature of the thing that they want, then please email in and describe the nature of the query. And I just say that because I know there's a couple of people who've obviously emailed in saying, I'm struggling, please can you call me. Unfortunately we can't obviously offer that, but it is there. There's FAQs on the website, there's links to videos. In fact, I'll tell you what, I might actually, let me show the website because it's probably helpful, isn't it? Yeah, let me do that now. Yeah, so this is the website. I'll just change the size of the screen. So obviously this is the home page. If you go right down to the bottom of the home page, there's obviously a link here down at the bottom that you can register. If you go to download, you can download the toolkit. This is exact same as, in fact, it links to the same spreadsheet that's on the LGA website. So it's just the same spreadsheet. And then the guidance, we've done it in a PDF form as well, so you can download the actual guidance. The guidance actually walks through technically how the thing works. It tells you how things are necessarily calculated and the methodology behind it as well. So that might be helpful. If you go to videos, there are, well, firstly, we've had very kindly Dr. Jane Townsend from the Home Care Association and Martin Green from CPA as well had done some messages for us just to let people know that, you know, this is really a once in a generation opportunity to use this toolkit for the purposes of the DHSC. But yeah, that's a few minutes interview there. And then we've got a couple of previous sessions that we did, one we did with commissioners and another one that we did with providers. I will update the website with this session, and we've got another session that we did as well. But practically speaking, if you go down this, it will literally timestamp you to individual sections of the toolkit. So if you are struggling with, for instance, how travel time and mileage works, and you click on that, it will go straight to YouTube. It will go to, I'm sorry, it's me talking again. That's probably really boring for you all. But practically speaking, it talks about, I'll just mute that because it's talking at me. It talks about travel time and mileage. And then, funnily enough, I've got a section here, impact of varying travel time on unit costs. So the thing that I've just spoken about now is spoken about for 4 or 5 minutes on there. Each of these sections, whilst the video is something like 90 minutes long, you don't have to watch the entire video to get the information you need. The sections are probably 2, 3, 5, 6 minutes long at most. So if there's only a particular section, so, you know, we've had questions, walkers and drivers, how do I account for walkers? So there's literally 2 minutes there, 2.5 minutes of what the difference is between walkers and drivers and how you may take account of that in the model. And then obviously we've got other guidance here. This is something that we've literally just put on this week. So anyone that's just got the email this week, which obviously advertised this session, will also see that there's may have also gone on the page here. So we've gone through a little bit of almost like a checklist of, I called it abnormal unit cost, but basically speaking, this is if you're expecting a certain unit cost to come out, because obviously you should know your income as a business, you should know how many hours you've delivered as a business. So if you divide your income by the number of hours, it will give you a unit cost. But obviously, if you're using the model to almost do a zero budgeting approach and build that cost up, you are likely to get a different answer. And if that different answer is way out compared to what you were expecting, then there's a couple of checks that we'd recommend that you do. And this is all about basically going back and saying, are some of these things reasonable to what I would expect? So there's a bit of a step-by-step there. First one is about total business volume or apportioned volume. So for instance, one of the issues is if your unit cost is really high, and you've only accounted for part of your volume, and you say, well, actually, there's a chunk of my volume that goes to another part of the business, you know, but in my overheads, I've stuck all of my overheads into this part of the volume. It's not going to calculate the unit cost correctly. So this is just an example. It tells you which cells to check to say, have I got this right? And then the potential solution. Thing about average visit lengths, something about travel time, branch capacity as well. So we talk about the branch capacity and what, practically speaking, what that actually does, and then just an error here that we've example error here to say why the cost might be wrong. Training and supervision, a couple of people asked questions about that. Overheads as well, and we've got a section on employers NI as well here. Employers NI is a particular one. I'll just spend a minute talking about this. There is a nuance in the model where because the model works by applying the tax threshold and the tax liability, which is obviously comes from Gov UK, and the reason why it does this is because if you're forecasting you know, a level of activity and you want to calculate a potential NI bill, but you don't know what that will be, then obviously we do it in a particular way, which is, well, let's just use the tax thresholds that are known to us and apply that in the model. So obviously it applies that, but the practical application of that and the particular nuance here is sometimes this average staff cost per annum might be lower than the threshold, and therefore you might get a negative figure. Now, this is obviously incorrect, and the way to check and balance that is there's a number of different options here. So the first one is the number of staff might be too high, and therefore if you reduce the number of staff, that will increase the average cost per week. It will actually then give you a positive NI bill. So that's the first and probably most important one to check. The second one to check is the threshold. So if you're applying the actual tax threshold for the year, then you should be okay with this one. But if you've put in there the actual NI bill that you incurred as an organisation, it's not the NI bill, it's the threshold for tax purposes. So if you put the NI bill in, it's not going to calculate anything for actual employers' NI, and therefore it's probably going to give you a negative. So check that threshold is the tax threshold and not your NI bill, which is this option B. And then option C, if you still got a balance here that's wrong, then there's two things. You can just add the balance back in the overheads, or you can add in. So if you just add the same balance back, that means it'll give you a balance of 0, which it might not be 0 for your organisation. It might be a positive figure. So obviously what you've got to do in that instance is not just add the same balance back, but you've got to add on what your actual employer's NI bill was as well, because obviously if all of these other figures are correct but that's still wrong, then that's the last check that you'd have to do. But there are a number of other checks in here that we'd obviously encourage people to go through and make use of.